Okay, folks, so just a very quick video and an update on the trading as it stands at the moment. It's a couple of hours before the New York Open, so it's Sunday night, the 13th of March, and I've got the euro and the pound on the chart right now. And we actually went through this in my last video when I was looking at the cell phone trading, but let's have another quick look at it again. So first of all, we'll start with the euro. This is the euro at the moment. Remember, the market is now closed currently, so there's nothing moving. And the thing that we notice is that we're in a downtrend in the euro, but we are moving down towards the 78.6% Fibonacci level. Now, that'll be the first opportunity to trade, the first place that we'll be looking. Now, remember I showed you that on this account, I've got an order in for the euro at 2-to-1 leverage, so an average position size to buy at precisely 1.0875. And if I just pull that down, and I haven't got a stop loss and a take profit, I'm going to have a look at that shortly. But the stop loss will be small, in the region of 20 to 30 pips, and the target will be in the region of 40 to 60 pips, so double the size of the stop loss. Because it's a counter trend trade, we'll be looking to take profit quite quickly or move stops to break even as soon as we move 20 or 30 pips away from the entry price. And that's the entry price over there, 1.0875. It's right on that 78% Fibonacci level, 78.6%. So on that line there. So I'm not going to be, I might be, but probably not awake at the time when the market reaches here. One thing that does concern me, which places this trade in a very precarious situation, is that there's a lot more talk of conflict in Ukraine taking place over this weekend. So if there has been an escalation during the next few hours, which is quite possible, there's already been a bit of an escalation this weekend, then we might see the euro blast through that level. So be very careful or don't take a trade. But if you do, make sure you move the stops to break even and or take profit as soon as you can. And if we have a look at the day chart on the euro, you can see why, because we're firmly in a downtrend. And even though we're approaching that 78.6 down there, if I just zoom in, so that's the day chart view of what we just saw in the hourly chart. So we're approaching that level there. The day chart candles are bearish, so everything looks pretty bearish. And if you look at the longer term view on the euro, in fact, let's just put a quick trend line in there from this top area downwards, where you want to just put the trend line in. Come on. Why is it being irritating? Let's do it in black. It's because there's a text box in the way. That's annoying. All right, so if we just pull that down, you can see that the false break in this region here that took place earlier on and actually defeated that trend line. So I'm going to cut off the tops of those candles over there, these ones, because that was a false break above this more substantial trend line, more defined, excuse me, by these three touches there at the top, there and there. Actually 4 touches and another one there, and this was a false break above just prior to all this conflict starting in Ukraine. It actually looked like we had a good chance of reversing this downward trend until all of that started happening. So pretty bearish scenario overall in the euro, and yeah, so we would generally be looking to sell the euro. But because we've got no selling opportunities at the moment, we'll try a counter trend trade off this fib here, back to the hourly chart. Now, if we have a look at the pound, US dollar. I'll just have a look at that. Remember I said in the last video there's not really much going on here. We're just moving ever downwards. There's no support beneath us. There's nothing to trade off. For now, we'll just carry on moving down. If we have a look at the daily chart, I think we did have a look at this before. There you go again. You see we're right down here on the daily chart. And there's nothing really very much to talk about in terms of support until we get all the way down here, down to this area here, which is where the fibs start kicking into place. So we'd get the 50% fib quite a while, but quite a way beneath us. So, and that'll act as a price magnet. So the price is likely to move down towards this level. When I say likely, more likely than it rising from this point on upwards. And we've just broken through and closed well beneath this current support here, the first Fibonacci level. So very bearish on the pound. We don't want to be looking at that at the moment. And the only other one I want to really look at whilst we're doing this quick update, let's just neaten this up and get it back to where it belongs, is the Australian dollar. And this is the hourly chart. We can see we reacted off that we actually traded this short over here and over here. That was the 78.6%. You can't see it on this chart because that was on a daily chart. But this level here was the 78.6% retracement level of the daily chart. And we've moved down. That was a beautiful trade off that, this shorter term Fibonacci, broken down through that trend line. So generally bearish as well. And the only thing we could do, let's get rid of this. Try and get some decluttering going on the trend line because that's been broken. The only thing we can do really is put a Fibonacci in from this low up to that high, which is a very short-term thing. And again, we've got a 78.6% Fibonacci below us right there. And, you know, it might be worth just having a little bash at that as well. It's not a lot to go on, but it may be worth 20 or 30 pips in profit for a very quick trade. So I'm going to put an order in here, actually. So that, let's look across to the side. See if we can see. No, we can't see it very easily. So let's just put the cursor on there. And that's at 0.7270. 7270, nice round number. So if we just go up here, I'll show you how to put an order in very quickly. And here's the Aussie. So we want to be selling the Aussie. We want to place a limit order in. We want to put 100,000 euros or dollars in this case, and that would be at 72.70. Oh, sorry, we want to buy, not sell. Silly boy. All right, so we want to buy at 72.70. I thought I was thinking sell because the price is moving down, but we actually want the price to move down and then to buy. So it's a buy limit order at this price, 0.7270. We're at 72.90 now, so it's only 20 pips below us, 100,000. And stop loss, I'm going to put it just really a 25 pip stop loss. And I'm going to do it in terms of pips, so I don't have to calculate the price. It automatically populates the price box, so we know what price that stop loss. I'm going to leave the expiry at 1 week, but we can remove this order at any time if we don't get the opportunity to trade it. In other words, if the price doesn't reach 72.70, then we won't be trading it if it rallies before then for some odd reason, which it could do. Just remember, the markets are unpredictable. They have some sort of predictability or probability attached to having a decent trading system like the G7 system. But at any time, things can change, go differently to what one would expect. All we're looking for is an edge to win more than we lose. But we certainly will lose from time to time, and sometimes we lose a number of trades in a row. So it's not totally predictable. We're just working with odds and probability. So that's the order in. So if I just say submit there, that'll appear in this window. There it is there, exactly as I said. And I'm just going to shrink this down so we can have a look. So when we get down to this level here, 72.70, there's an order in to buy the Aussie. All right, so let's have a look to see if there's anything else. Nothing really. For now, the rest we can have a look at on Monday. I'm just going to quickly put a day chart on here just to see if there's anything of interest. And you can see I've been looking at these charts for maybe, I don't know, 15, 20 minutes. And this is as long as it takes to set up your trades and set up your strategy for the next number of hours, really. So it's pretty quick, and it doesn't take all day long. Don't have to sit at the screen all day. I want to put a trend line in here and see what we've got. So I'm going to go from this low, and I'm going to try and actually, so the trick with trend lines is, and it's a little bit subjective, of course, but if I do it like this, I could just do it in the conventional manner and put it touching the bottoms of the wicks. But you can see, yeah, all right, let's put one in there. All right, that's the conventional trend line. The normal way is to just look for a move up or down and draw the line along the bottom of the wicks in case of an uptrend. But we only have 2 touches. We're really looking for 3 or more touches of a trend line before it becomes a significant trend line. However, the other thing we can do is, if I can just draw another one from the same position at the bottom, I can draw it up like this. Now it might look a little weird to some of you, but it's equally valid. In fact, I'm just going to, not quite, I just want to pull it around a little bit. There we go. So what I've done is I've cut off some of the predominantly over here, cut off those 2 long wicks there, those ones in the middle. But what I've done is I've touched as many of the rising, the other wicks as possible. So I've got one there, I've got one there. Those are a little bit far away. Those are pretty much touching the trend line. That one, okay, it just poked through, but it kind of, you could say that's a trend line bounce because we had a false break beneath, and neither of those candles closed beneath the trend line. There's another touch there, and there's another one that's just about a touch there. So yes, we've cut off a couple of wicks, these 2 ones, but those 2 candles did not close beneath the trend line. So for that reason, that's one of the reasons why I'm cutting those wicks off. And the other reason is because if I do that, I get more wicks touching the trend line, so it becomes a more reliable, substantial, and solid trend line. So I'm going to go with that one. But let's keep that one in place in any case, because it has some sort of validity to it. But notice as well that if this price does drop down to this rising trend line, the second one I've drawn here, this one here, if the price does reach that trend line and drop down there, it's also the 78.6 that we were just talking about on the hourly chart. You can see it here on the daily chart as well, of course, but it's a little bit bunched up. But if I go back to the hourly chart, you'll see that that trend line, this one we've just put in, and the 78.6% fib meet just below us. So we've got a confluence of 2 trend lines, sorry, two lines, I meant to say, a trend line, and a 78.6, my favorite Fibonacci, and an oversold stochastic. And in fact, just looking at now, I can put a horizontal line in roughly the same price if I wanted to, slightly lower actually, but quite close. And you can see it's a support area, quite a significant hourly support area over here. And that line is just drawn. Again, I've cut off the wicks of, or the wick of that candle in the lower part of this candle, a little bit there as well. But I've touched a whole bunch of candles at the bottom of their moves up and down. So that's a pretty significant trend line. So we've got a trend line, 78.6. We've got a horizontal line over sold stochastic. So I think that's a pretty reasonable punt, I would call it, for a trade. So we're going to leave that one in. So that's the Aussie. And I'll leave that on the chart for now because there's not very much of interest on the pound. So let's just leave the Australian dollar and the euro both against the US dollar on the screen. So I've got my orders in place. One to buy the euro at the 78.6, this one. One to buy the Aussie at the 78.6, that one. I've put half the position size on the Aussie because it's a slightly more tricky trade, I would say. So we'll see what happens. And that's it. That's the update. Sunday night, 13th of March, 2022. Beware the war in Ukraine this coming day or two, and be safe in the markets. If these trades go against you, don't panic. Remember, they both counter-trend trades, although not so much the euro, really. It's a counter-trend trade in terms of the euro's move down, recent move down, but overall, sorry, I'm talking about the Australian dollar. Overall, the Australian dollar has been quite bullish, so we'll have to see what happens. All right, well, that's it, and I will update you again tomorrow sometime. Good trading and good luck, and take care.